Giants Are Bread. I'm Thomas Schneider, and I'm thrilled to be here at the PSP studio. While I can't predict the future, I admire your ambition to replace Philip one day. Keep biding your time, and who knows what opportunities may come your way. Now let's focus on discussing our investment thesis and how we can align our strategies for success.
No, man, you're stupid. Okay, you're not ready to take over me because you can understand simple instructions. Hey, hi, I'm Philip. Welcome again to Giants Are Bread, and a show that I hope to get myself replaced by AI one day as a host. I'm very glad today we have Mr. Thomas Schneider all the way from London. He is the partner of Isomer Capital, one of the very powerful leading venture cap and very active venture capital fund of funds in Europe. And we bring him here today because I think in particular there's a very strong angle on ESG that Isomer Capital focuses on. And I think that is very important for Singapore companies and Singapore family offices to know about this element about Europe. Oh, by the way, in addition to being a host here, I'm also the secretariat for the Family Office Alliance. This is an alliance of family offices of about 80 to 100 of the top family offices in Europe. And this organization represents their views here. Okay, hey, hi, Thomas, welcome to the studio.
Hi, Philip, how are you? Thank you for welcoming me in the studio, and thanks for the Family Office Alliances also to welcome me in Singapore. Great to be here.
Yeah, it's been 3 days, having walking around Singapore in the hot sun, wearing a jacket, looking really foolish, but I think quite smart and spiffy.
Next time I will read the memo better about the temperature in Singapore.
Yeah, it's pretty hot there. Okay, well, it's hot also because there are many family offices here, many wealth and financial institutions are here. Tell me, why should Asian family offices look beyond Asia to look at Europe? I mean, isn't Europe like very confusing place, very complex, extremely difficult to invest in, lots of regulations, and that's why so many companies are coming here to Singapore? The question is, why should Singapore family offices consider Europe instead of, Europe instead of Asia?
I think, first of all, that there's a lot of opportunity in Asia, and it's great for Asian investors to invest in their own market that they know very well. However, one of the first rules of wealth preservation is diversification. It's always a good thing to do. And geographical diversification, it's of paramount importance, as we know. And I think that Europe has been known for, obviously, its luxury goods, about its food, about its wines. But something that maybe some investors know a bit less is that it became a tech powerhouse. Today we have over 390 unicorns in Europe.
What's a unicorn? I thought these are strange mythical creatures.
Indeed. When you're an investor, it might be mythical because when you find one, it can be a fantastic return. Basically, a unicorn is a term coined by a US VC investor, and it's called a company that is valued over $1 billion.
$1 billion US dollars.
US dollar.
That's 1,000.
We can say $1 billion US dollar, 1 billion euro, 1 billion Singapore dollar. It's still above 1 billion. It's still a lot of money.
Wow.
And however, to create those companies, it takes a lot of work and effort. And Europe has been, over the last 15 to 20 years, been breeding those mythical creatures. Fantastic university, a lot of coders, more coders than in the US. When I talk about Europe, I talk about the geographical definition of Europe, so 44 countries. It's now the biggest market in the world if you combine these 44 countries, and so there is a lot of deepness into this market, plus a lot of technical expertise, which has led to the explosion of this ecosystem, where we see the exponential growth that you like to see in tech market. If you want, Europe, it's a bit where were the US 20 years ago, and so you have the early hockey-stick returns that you had in those markets. And Isomer, it's one of the partner of investors that want to access the European tech opportunity. We've devised a model where we have eyes and ears in every tech ecosystem of Europe, because Europe, as I said, is 44 countries. but there is no concentration of tech. Tech is coming from everywhere, not only London, Paris, or Berlin, come also from Stockholm, Prague, Brussels, Madrid, and all these cities have bred unicorn on their own time. So yes, that has been our approach, and it's been.
So just to wrap the head around numbers, 30 unicorns out of a universe of 390 unicorns in Europe. Right, just say 30. What the kind of, what valuation, the total portfolio?
So the unicorns that we've bred, we have some that are, we were early in companies that a lot of people knows, like Deliveroo. We're early into companies like Darktrace, and these have listed now and reached multi-billion valuation. Deliveroo listed at 4.4 billion.
Mm-hmm.
So, but more than 30, so the 30 unicorn is fantastic because people recognize this term. But we had a lot of companies that have been growing quite exponentially. We have today in our first fund 169 companies that are valued 3 times their original money or over. So unicorn is great to have, but there's a lot of companies that are even worth 500 million or 700 million that are growing and that are creating the big global champion that we like to see in tech.
Okay, so your argument is that Singapore family offices should look at Europe because 1, diversification of geography, 2, Europe is kind of like on a renaissance where technology is concerned, lots of good opportunities. Is there any other reasons?
So yeah, basically you have to plant your seed in Europe and start to figure that out because it takes time to figure out a tech market. And if you don't start today to invest in European tech, you might miss out.
No.
And so I think the second part of the question was, I don't remember. What was the second part of your question?
Okay. So there were 2 reasons. You say that why Singapore family offices should invest in Europe. One is geographical diversification, and the second one is to that there's a technological renaissance. Are there any other reasons why we should do that?
Yeah, so the reason is what I say. I think is if you want to have also strategic value, depend on where you come from. There's a lot of family offices that still have an operating business, and they want to they understand certain technology, and they want to access co-investment opportunity. They want to see how new technology are developed. So Europe is breeding a lot of new technology. DeepMind. People know DeepMind because he won against the global champion of the game of Go.
Hey, that's Jan Tanin's company.
So yes, there is a lot of great technology that comes out. But more importantly, Europe is capturing more than half of the total capital invested globally into purpose-driven and climate companies. So Europe is on the forefront of these sustainable investments. There is a lot of combinative factor that makes it a fertile ground to breed companies that will help to solve the world's biggest issues. And it's a combination of obviously money, a lot of capital, as I said, but also regulation. And Europe, when they are putting their hand together, when they don't fight over trivial subject, when they manage to agree, they are doing something great in terms of regulation. And one of the example is the GDPR regulation.
What does GDPR stand for?
So GDPR is basically the regulation that changed the mind of big tech about using your personal data. Personal data have a value, and before they were using for free. GDPR means that companies are not allowed anymore to overlap your data for free, and they have to ask your consent.
I see.
And so that has been very good, and they are doing the same for climate. So regulation is also a big impact, and I would say also the ecosystem. In Europe, we have a lot of companies that are doing that working on recycling, working on reusing electronics.
Okay, so before we get there, let me summarize for the listeners. So family offices in Singapore should consider investing in Europe because geographical diversification, 2, renaissance in technology, and 3, a lot of major companies have been evolving from there. Like for instance, DeepMind, whose owner Jan Tanin was with us a few weeks ago. He sold this to Google for $500 million. I think a lot of people do not realize that a company like Skype, for instance, was born in Estonia. Spotify
In Stockholm.
in Stockholm, in Sweden.
Yes.
Yeah, and some of the household names. I was quite surprised. Deliveroo. I mean, I thought it's some US or Asian because it sounded like a kangaroo thing. But it's actually, where is it from again? And
It's from London. From London.
And it's you invested in it? Or?
Yes. So we had so through our model, we invest in every part of Europe, and that was a fund that was based in the UK. That it was a great founder that came to our office and says, "Oh, I have a great idea. I'm an investment banker, and every time when I'm at 8 o'clock at my desk, I want to eat a hot, good meal. However, I can just go downstairs and buy a sandwich. Would it be great if we had some food delivered to my desk from a great restaurant from around here?" And so he said, "Yeah, I'm going to take my bicycle and deliver a meal." It didn't seem very techy at the time, but his mind was more about how he can help restaurants to increase their sales and getting data about what people want to eat at a certain time of the day and so forth, and be able to power up the local restaurant.
Right.
And it has been an amazing successful company, and also COVID has even pushed it higher.
Yeah.
Amazon invested into the company, and then they listed. So that was one of the company that was a big success, and they are redefining the way you consume. So it's a pretty good innovation.
Okay. So Thomas, I'm going to see whether if AI can one day replace you. So I'm asking the AI, why should family offices invest in Europe and... Oh, sorry.
I think the AI needs a bit of help.
No, I typed in the wrong thing.
So it's a human error.
No, it's a human error. So let me ask it again. So why should family offices in Singapore invest in Europe instead of Asia? Okay. Oops, I forgot to switch on the sound. Sorry, all this will do the edit. So Thomas, let's have a check and see whether the AI can replace your very strategic answers, geography, technological renaissance, and also some of the big answers are there. But let's see whether the AI has a different point of view from you. Yeah. So many years of long experience to come to this conclusion, eh?
Diversification. Investing in Europe provides family offices in Singapore with an opportunity to diversify their investment portfolios geographically. By expanding their investments beyond Asia, they can reduce concentration risk and benefit from the potential growth and stability of European markets. 2. Access to innovation. Europe is known for its strong innovation ecosystem, with numerous tech hubs and startups. Investing in European companies can give family offices exposure to cutting-edge technologies and disruptive business models, which can drive long-term growth and returns. 3. Cultural exchange. Investing in Europe allows family offices in Singapore to engage in cultural exchange and build relationships with European counterparts. This can lead to valuable knowledge sharing, collaboration, and potential business partnerships, creating a bridge between the two regions.
1 point more than you. Okay. Thank you.
Well, thank you for the avatar. Really good, really good.
Hey,
But I still believe he misses a bit of passion in what he says.
Definitely. No passion, right? You are a soulless creature. May you never replace us.
At the end of the day, it's great, but when you invest in tech, it's a people business.
That's true. Talking about people business, I understand that actually there's a big difference between Isomer Capital vis-a-vis like other typical fund of funds or other typical fund of funds. I mean, for the viewers' interest, are actually funds that raise money and then they invest in venture capital funds right, in order to do the investment. And most of the time people are like, why do I want to invest in a fund? Invest in a fund is why don't I just go direct and invest, or why don't I just invest in a VC or set up my own VC for that matter, right? I understand Isomer Capital has certain benefits and advantages that's very different from others and capabilities. Can you tell us a bit more about that?
So, if you took the operational metrics, invest in a fund of fund is also a team that can help you to do the due diligence on VC funds, can help you to doing a screening of what's available, and then having a diversified portfolio, diversified in terms of geography, in terms of vintage years, in terms of technology. And that's all good, and that's what most of the fund of fund would do.
Mm-hmm.
I call that the top-down approach, and I think that's has limited value. It's a great. All these benefits are true for Isomer, but I think that when you do a typical fund of fund, you give access to funds that are directly accessible. So your value would be not just to say that you're going to identify who are the good fund of a certain geography. What we do is more a bottom-up approach.
Bottom-up approach.
Yes, a bottom-up means from the bottom, we're going to analyze on every geography who are the first and best investor into the great tech company that have emerged from this ecosystem.
Mm-hmm.
So if you look, for example, at a company that I can take often as an example, which is UiPath. UiPath is a company that was born in Bucharest, Romania. It does robot process automation. I invite you to go on the website to look what they do. And they listed in April 2021 in the New York Stock Exchange for 26 billion. So this company were at the original, like every tech company in the world, two guys in a garage that wanted to create a software that will facilitate people to communicate between software on their computer, or to know or to replicate what they were doing and save them some time. These two guys in a garage, when they emerged in Bucharest, there were not that many VC investors that could find them. And if you look at how they were founded, it was what we call the local digital champion. These are small VCs that are the better grasp on their ecosystem. They are having the first coffee with the founder. They knock on the right door.
Mm-hmm.
But more importantly, they have the time to help them scale and going toward from the pre-seed, from the very early stage to their first revenue, their first customer, and they have the time to help them. So if you look at UiPath, it's on the website of Axel and all the big funds that say, oh yes, we found UiPath. But originally it was 3 funds, Seedcamp, Credo Venture based in Prague, and Early Bird Digitalis based in Berlin with a Turkish partner.
So these are small VC local funds that found UiPath and then give them their first seed funding, pre-seed funding, and then grew them.
The first believer.
Right. So are these smaller VCs, are they your feeder funds, your feeder VCs?
So it's our portfolio VC. What we do is we really worked on the European ecosystem to be a value-added player. So we understood that a player was missing in Europe because these great VCs were pretty lonely. In the same way, a startup will look for a partner to scale. So a VC, what's the value added that the VC brings to the table? We are an investor that helps the VC, the venture capital fund, or the venture capitalist to manage better or improve their operation. We help them with network, with advice, with we are on their board, on the LPAC of every fund we invest. And so we are a very hand-on investor. We are on their WhatsApp. They call us when they have a problem with their portfolio. They ask us some advice. We'll never influence how they invest. This is not our job. They are the best investor. They are the one to find those gems. But what we're going to help them is to realize, or to help them to scale their portfolio and bring value to the investors.
Okay.
So it's a very different approach. With how the fund that we back are very small. In the world of investment, a 30 million fund, 50 million fund is small. And these are the people that we like because they are the early stage investor, the first money into the great company of Europe.
So in other words, Isomer is like this mothership that has a neural network thrown all over the 44 countries in Europe. And you have this, different smaller funds, and they look for the good deals. And then But how do you know that these are good deals that they invested in, or how do you capture them at the right stage? When they are $30 million, $40 million, instead of when they hit $1 billion. I mean, do you have any technology behind it that kind of monitors it?
So there is not that much technology for sourcing great fund. It's the same way that you source a great founder. At the end of the day, it's a people business. So what we do is obviously a very thorough due diligence, but we also listen to the market. As you say, we are network in the entire market. So it's a small market at the end, and everybody know each other. So you start to see what is the reputation of this VC, how active they've been on the board of those companies. Have they really brought value? Did they really help them to scale? Is it just a name? When you look at the VC, it might put on his website, "Oh, I've backed Deliveroo," as an example. But was it the one that was the most value-added VC that enabled them to scale and bring this value?
Yeah, success has many fathers, right? Everybody back Deliveroo, right?
And many companies will fail. We know that, but innovation is experimentation. So when you're doing venture capital, you are backing people that will invent new business model, new services, things that don't exist today. Mm-hmm. It's easy to replicate a model and to invest in a model that has worked in the past, but to define a new standard, a new product, a new technology, it's hard work. And not everybody would succeed. It's, you shot many times on the goal, and some will go in, and many will go out, or will be stopped. So that's the role of venture capitalists. So that's why we really like our approach, where we diversified at an early stage the portfolio, and we have today, through all our investment fund, we have over 1,900 companies through the various portfolio.
Right.
So many shot and
how many funds?
So Isomer has 3 funds, and we invest in 74 funds throughout Europe. So we have a lot of people that are. It's like as if we were an investment company with over 1,000 people, because in every part of Europe we have a partner that will source the best companies. So your question is, how do we know if they are the best? Sometimes we get it wrong. But if you invest in a VC and you've done all this research and you feel that they are the preferred partner for this early stage startup, if you see that, then you can think that they will be able to attract the best founder, but also having the capabilities to scale them.
Right.
And we might get it wrong, but so far we managed to capture 30 unicorns out of the European ecosystem. So it's been working quite well. And our network of VC have captured 50. So there is some proof point there. But you're right. It's that's why your question about AI. Does AI can replace Isomer? Venture capital is not a number game, because there is not that many number. When you meet those guys in the garage that says, "I'm going to create DeepMind," but you can talk about Farfetch, Spotify, and etc. At the beginning, there is no data. You have to look at the person and into the eyes and say, "Okay, what do you want to do?" And then this is the founder at the beginning. You really believe in his story, and he will create his company. At that point, I need diversification, because it doesn't work, and often it fades. But it's the only way to make sure that you have access to this founder, and when they scale, you'll be able to co-invest.
Right.
And that's also one part of our strategy, is that the early stage is very diversified, and as the company grow, we have the optionality to co-invest into the best company, and our investors come with us and also participate to those rounds.
I wonder, Singapore's lack of tech entrepreneurs, is it because of a lack of garage or people?
That's the two
Maybe
many
we need more
garage,
garages. We're all public car parks here in the HDB estates, right?
Indeed, it's a good. Well, maybe you can do it in a coffee. I think it can work as well.
Okay, so Isomer is different because it has 3 funds out. Currently, how much fund under management do you have? 250 million? $250 billion?
We are above. You are around 700 million.
Wow,
it's something that we know. It's not. We don't run for the AUM. That's not the strategy.
Right.
We run for the quality. In fact, we never grow the size of our fund. They are always the same, and that's what we try to do.
So these are invested in like 45 smaller venture funds, and then all these invested
74.
74. Okay, and 1,600 companies all over Europe, all growing at different rates, and then whenever any one of them starts to really accelerate growth, then Isomer will be able to spot them and then make special direct investments in them, capture the unicorn, so to speak. Right?
Yes, that's well. Again, the unicorn is not the most. You don't do this job just to capture unicorns.
Okay.
Unicorn is only part of your return.
Right.
What you want is to create fundamental technology, even in climate tech. Climate tech is hard because you need a hardware for fighting climate change. And so there is a lot of companies that are building amazing technology, carbon capture technology, a lot of real, like even in Tesla. Tesla is a hard tech company. So we have an electric bike company born in Belgium called Cowboy that is resolving the commuting into big cities problem. So for these companies, they are growing, and it's hard for them to make a return out of that. And however, this fundamental technology will be applicable for buyers, and 95% of the return of venture capital will come out of M&A. Other company that needs to buy those fundamental technology to power up their operation. So unicorn and IPO is fantastic, and you can have also a unicorn that is buy through an M&A, by the way. But it's true that everybody looks at the IPO and at the big name, the Facebook and etc. But 95% of the value will be through a merger and acquisition. Other company buying them or aggregating to create a bigger champion.
Okay. Well, coming to that point about successful companies, I'm asking the AI a simple question. Is the world going to end because of climate change? Right? Let's see what it says. But I believe that Isomer is actually very focused and targeted on ESG and climate in its investments as well. Right?
1. Climate change is a significant global challenge that requires urgent action. While it poses serious risks to our planet and ecosystems, it is important to approach the topic with a balanced perspective. 2. The world is not going to end solely because of climate change.
Oh, but it still end.
However, if we do not take decisive action to mitigate its effects, it can have severe consequences for human societies, biodiversity, and the environment. 3. It is crucial for governments, businesses, and individuals to work together to reduce greenhouse gas emissions, transition to renewable energy sources, and implement sustainable practices to mitigate the impacts of climate change and create a more resilient future.
So I asked the AI another question. So can capital help to make a difference, since that's the case, right? And depending on how they answer, maybe Isomer can validate or say that it's not true.
1. Absolutely. Capital has the power to make a significant difference in various aspects of society. It can be a catalyst for economic growth, innovation, and job creation. 2. Capital can also be a force for positive change by supporting social and environmental initiatives. Impact investing, for example, directs capital towards projects and companies that generate both financial returns and measurable positive social or environmental outcomes. 3. Additionally, capital can be used to address pressing global challenges such as poverty, inequality, and climate change. Through philanthropy and strategic investments, capital can be deployed to support initiatives that improve lives, promote sustainability, and drive positive change in communities around the world.
Well, that's the theory. Thomas, does Isomer Capital look at ESG and climate change? Is that actually what you do?
I agree with the AI. Capital is very important, and what's interesting is that we have 1/3 of our portfolio that is focusing directly on one of the SDG goal defined by UN.
What's SDG?
So
sustainable.
The Sustainable Development Goals
Okay.
defined by United Nations,
Right.
and it goes from agriculture, food, social.
So 1/3 of your investments are inclined towards SDG, Sustainable Development Goals.
Yes. But it's not by nature. We are. So I think capital is important, but returns, performance is important. I think that return and impact are not exclusive. It's not either return or impact. And what we do is that we focus on return. But what we believe is that over the long term, founders that will outperform the market will be the one that have a clearly identified impact strategy. And in tech, structurally, more founders are focused on resolving the world's biggest problem. I never met a founder that don't want to efficient processes, efficient assets to resolve, the food crisis. And if you look at innovation, is the only real strategy that can help government to meet their goals. So what we do is that we focus on technology, and by structure, by again result of our portfolio and our work, 1/3 of our portfolio founders are working actively toward an SDG. So it's been, however, if you focus on the short term, and venture capital, that's the good, is passion capital. It has time to build technology. If you focus on the short term, maybe return and impact can be dissociated. This is not our strategy. We really focus on the long term, and we believe that investors that have a clearly identified strategy that help to resolve the world's biggest problem will definitely perform well. And also by structure, a founder will work with a VC or an investor that have clearly clearly defined ESG policies. So the market is self-regulated itself. So best founder will choose the best VCs, and one of the criteria will be their ESG policy and how they think about diversity and how they think about. So we see a lot of founders that don't want to work with investors that are not diverse. We meet a lot of founders that don't work with investors that don't have a clearly defined ESG policy. In our portfolio, we have even one fund that link the carry or the performance fees that they get to clearly identify ESG metrics. And Europe is leading on that side. And so it's not only capital, it's also behaviors. And because if you don't change the behavior, both of the consumer and the investors, then you can put all the label you want about ESG, about things, is not going to change the world.
So linking this back to your earlier comment about GDPR, basically the regulations in Europe for environment, for ESGs, if I'm not wrong, one of perhaps the most advanced globally, right? And that is filtering down to the capital and an investment with Isomer Capital, essentially. And if I'm not wrong, Isomer is one of the leading ESG brands and thought leaders in Europe at the moment.
So we're not that, no, I don't think we are a leading ESG brand. But what we have is that we have a very important role. Because we have this, we have been identified, and there was some various articles on that, we are the most proactive or active investor in European venture. If you remove government, we are the one that we've invested in 74 funds, so we're pretty active, and we do every manager. We do from micro manager to emerging manager to. We don't really care about the label of the manager. We're trying to find the best investors, and this is a very important role because we can influence the adoption of ESG rules. And our belief, when you meet a founder at early stage, when it is in this garage or the coffee, if you prefer in Singapore, you can talking about ESG. At the beginning is what can I do to develop my technology, my big idea. And I believe that my big idea, by the way, we solve some of the world's most pressing problems. It can be alternative protein. It can be AI. AI is going to help us to get to that point. So we believe that if we help this VC to have clearly identified ESG metric, but also being diverse, to hire female partners, to have a female that, but also from different origins, that's what drives the best return. We believe that if we plant the seed in this early stage company that ESG are important, when they grow and they will become a multi-billion-dollar company, they will have ESG policies and sustainability anchored into their DNA. And that what at the end the company of tomorrow will have to do. So obviously all the companies in the world will have ESG policies, and if the listed company have very strong ESG policies, but has been built afterward. Whereas we believe that if we can help those companies at the beginning to have these clearly identified metrics, it's going to help them in the future to have that embedded into their DNA.
So in your consideration of, for the audience view, I first met Thomas about a year ago and been persuading him to come to Singapore since, primarily because I think he has Isomer Capital has a very good framework where ESG is concerned and in terms of knowledge of ESG. So, during this visit to Singapore, I think we have been meeting with potential investors and also potential partners to pretty much talk about, what ESG, how your ESG experience is, and we hope to rub off some of the experiences. Can you tell us some of your investee companies that's particularly reduced, carbon significantly, etc.?
Yes, so we have we have a very diversified portfolio, and we have companies that are we have even a fund called Zero Carbon Capital, and is really developing fundamental technology to reduce the carbon and really deep tech, because that's one of the things. But we have also other companies that have grown quite a lot and that push us to consume in a different way. One company that comes to mind is a company based in Austria called Refurbed.
Austria.
It's called Refurbed, and is basically creating a marketplace to sell refurbished mobile phone. But mobile phone electronics, you can extend to all electronic part, because in the past what we used to do is that we have the iPhone 1 and then we have the iPhone 2 and we buy a new one, we drop the other one, and at the end we are at iPhone 25. I don't remember the number, maybe 14, I'm exaggerating.
14, yeah.
But an iPhone is interesting because I take the example of iPhone, but the same of Samsung, right? I don't have any strong preference for the brand. But 10 years ago you were buying an iPhone, it was $300, $400. Now you buy your iPhone, is $1,500. So if you could find a model where you can ally competitive pricing with a stronger consumer impact, and this is what Refurbish does. They basically buying old mobile phone, iPhone 11, iPhone 12, they send it to refurbisher, which are re-putting as in a new state. So you don't have e-waste. You reuse the same material. They just renew, they might change the screen. They might change all the part that might be a bit damaged. They put it back new and they send it back to the customer that had bought it on their marketplace. The company is growing at an exponential growth. He has a very, very strong revenue. We're talking about above 50 million. And they have their gross merchandise value is over 400 million. So it's a company that's really figured out how to do that. But more importantly, they've done some statistic and they've saved 700 ton of e-waste since they've started.
700 tons
of e-waste. And also how much carbon did they save in the process of building a mobile phone, etc., is over 100,000 tons of carbon. And the feeling is in Europe, that's why I was saying, is not only capital, it's also changing the mentality. Frankly, I have 3 children, and when they want an iPad or a mobile phone, I only buy refurbished product, because frankly I don't see the difference between an iPhone 13 and an iPhone 14. Sorry for Apple. The same functionality, but if I can do something good for the planet, plus save money, plus make happy my children,
why not?
Hey, it's a win-win situation. So that's one example. Another example is a company that does connected electric bike for urban commuter. It's called Cowboy, and
what's the name again?
Cowboy.
Cowboy.
Yes, it's an American name, but
where is this company from?
It's from Bruxelles in Belgium. Brussels.
Okay, I can pronounce that one.
Brussels.
Okay.
The capital of
Brussels.
Belgium. The capital of Belgium.
All right.
And so this is a fantastic founder, repeat founder, and he just says the way. It might not apply to Singapore because there's not a lot of traffic in Singapore, but most of European cities are hyper congested. people taking their car. The infrastructure doesn't support anymore driving cars. And frankly, when you look at maybe 90% of the time people use car, it was doing less than 1 mile, or I don't know the statistic exactly, but it's basically you can really find alternative solutions. So they came up with this connected electric bike for urban commuter, which is an electric bike that a super beautiful design. They won Holder Award for that. But it helps reduce congestion. And so the bike connect with your mobile phone to tell you what is the less polluted route. It's becoming a pleasure to ride your bike from home to work and work to home. It has so the engine is perfect, a 70-mile autonomy. But that's not the point. The point is that people are using now more and more the bicycle because it's becoming also a fantastic. It's a bit like a Tesla. It's a Tesla of bike, if you want. It's not just electrification. It's also the software that goes with the car. And if you have ever been in a Tesla, everybody loves to play with the computer and play that. It's a pleasure. And these bicycles are the same.
Right, cowboy. Well, that's interesting.
Cowboy.
Wow, that gives us a very visual picture of the whole investment scene. You know,
Yes.
when we edit, we will try to put some of the visuals in and look for them.
We can look for them. Yes,
Yeah.
that's a lot of companies in Europe are toward that. Reusing textile is the same.
Textile, clothes.
Clothes. Why buying always new clothes? Why fashion is moving so fast? I think it's one of the worst polluting industry in the world, the most polluting industry in the world. And fast fashion is terrible. Why you throwing your blue jeans 1 year after the other when it can last 20 years?
Right. So all these regulations that the government set down has actually, instead of crimping businesses, is actually driving innovation and changing the landscape, into a more sharing economy, and this creates a whole lot of possibilities, including cowboys, including refurb. That's interesting,
Yeah, regulation creates a lot of opportunity.
Would you come back, to Singapore again in September? Maybe we can have another session. We'll introduce, more maybe decision makers, policy makers to you. I think we need to hear what you have to say.
Well, I think Singapore is doing already pretty well. They are when you are very advanced. It's pretty impressive what you do. And I was working around Singapore, and you don't see a lot of waste around. And I think you have already a mindset that the mindset needs to be adopted on a wider scale. And it's obviously the biggest country in the world, and even US and etc. And I think it's going to change. But again, technology will be able to, and we see that in agriculture. We see that in food, in alternative protein. We see that in AI. AI is also something that's going to help into us achieving this objective. So sustainability, climate change is only one part of sustainability, but there's other parts that are important.
But I live in Australia, right? So every time after a meal, we have to separate our waste into green waste, general plastics, and then after that, food waste, and so those kind of habits haven't really taken root in Singapore, isn't it? So we throw everything down on common chute and that kind of thing. So maybe we still have some way to go in terms of changing our behavior to to refurbish, to recycle, and using less plastics.
Don't use fast fashion and things that are important part as well. Yes.
Okay. Well, thanks so much for being here with us today. Looking forward to you coming into Singapore again in September. Ladies and gentlemen, Thomas Schneider from Isomer Capital.
Thank you, Philippe. Thank you.
Thank you.